Hello everyone, thank you for watching and welcome to the first episode of this channel where I'll be discussing cryptocurrencies and my journey investing in this space. So with that said, there's not a better subject to start than Bitcoin, the most well-known cryptocurrency. And basically the question that I'm trying to answer today is Bitcoin and cryptocurrencies in general in a bubble? So I'm trying to bring some perspective into this question so that you can be at ease or make decisions based on these statistics to better serve your purposes. So let's start with these statistics from blockchain.info. Current market price of Bitcoin is at $4,300, just over that. Trade volume is $76 billion, which is a little bit lower than the all-time high of about $90 to $100 billion. So that is quite a high number. It's hard to ignore. As a matter of fact, several people, including Jamie Dimon from JP Morgan, have come and accused Bitcoin of being a fraud, while others, like Goldman Sachs, have said that it's hard to ignore and that this cryptocurrency space is not really going to go away. Reality is that there's not a lot of institutional investors right now in Bitcoin, meaning the majority of the market is not being controlled by institutional investors, which whether you like it or not, they bring stability to the markets and they decrease volatility. So let's try to translate this into the stock market. So here I have Apple. Give me 1 second. Let it load. So when we look at here, this is Apple and this is institutional ownership. These are, banks and 401ks and other institutional investors that own Apple stock. This is 62% of the market. If you go over to Facebook, this is even more massive. 71.36% of all shares of Facebook are owned by institutional investors, hedge funds, and other places that manage money for people, meaning the prices are very stable. These are institutions that cannot simply liquidate Facebook based on slightly negative news. If we go over to Netflix, you can see here that 82% of Netflix is owned by institutional investors, which is quite a high number, and it's not surprising. But that is currently not the case with cryptocurrencies. There's a lot of news that move the markets up and down highly, and that is a sign that there's a lot of individuals around the world that are not professional traders that trade based on fear and limited information, because of course they are not pros. I'm not a pro, and so they don't have all the information at their fingertips, and they tend to react wildly to the news, like China banning ICOs or China banning some exchanges or giving them some rules to abide that may decrease the amount of trading that happens. So at any rate, institutional ownership is coming. They will continue to increase positions. Some of these banks that are talking negatively about Bitcoin are investing in blockchain technologies. They are hiring people to do projects in order to bring the blockchain into their banks to see how they can move along, because they know that this is the future, right? So let me give you some more perspective. This is some news from comparing. Here we go. 1.7 trillion.com lesson. So this is an old archived article from CNN Money. Now look at this timestamp. This is November 9th of the year 2000. Stocks down $1.7 trillion from its 52-week high, meaning this is the value didn't go to zero. If you see down here below, the peak was $2.94 trillion, and we lost $1.7 trillion, so about half of the value. Now think of that number right there. It's $1.7 trillion, and cryptocurrencies are sitting, between 100 and 120 billion dollars. So we have at least 10 times to go in order to reach, the $1 trillion mark, and maybe 30 times to go to reach a $3 trillion mark. So that's not to say that the price of Bitcoin is going to go up without interruption. Of course, there's going to be some wild swings between now and then, but Bitcoin isn't really going anywhere anytime soon. Now, Bitcoin might get replaced at some point by another coin, but it's not likely going to happen in the immediate future. So if you think about the people who were long, internet stuff, they are the ones who are basically now investing in the different kinds of cryptocurrencies. You cannot simply ignore the rest of the altcoins, because that would be saying like, hey, I'm going to invest all my money on, pets.com. Now, obviously, pets.com is the poster child of failed internet businesses, but, it's hard to say that, hey, Amazon.com, Bitcoin is the Amazon of 1999. It's hard to say. Now, obviously, it's made quite a lot of returns, but, in order to protect yourself, it's imperative that we, diversify and fund the projects that have the potential to disrupt and that have the potential to make blockchain usage more widespread. Now, let's look at this graphic. Now, this graphic is a little aged because it puts Bitcoin at 41 billion when we just saw the stats that it's at 76 billion. But regardless, let's look at, same wealth as Larry Page, half of Bill Gates, all cryptocurrencies, roughly $100 billion, which is less than 4 times Amazon, less than 7 times Apple, and of course less than the money of US dollars in circulation. Now, if we could, capture, 10% of the gold market cap, or even 5% of the stock market, that is a long way to go for Bitcoin and the rest of the cryptocurrencies to reach a peak. And so for that reason, I am very bullish blockchain technologies, because think of the internet in 1999. Those were mainly informational websites, GeoCities and Yahoo and search engines. There wasn't all this YouTube and Netflix and all these other things. There wasn't social networks. There wasn't online streaming. There wasn't online dating. There wasn't, online payments were in its infancy. eBay was barely starting. So right now, what's on the blockchain is not, it's not as, we cannot even imagine what's coming in the future. So obviously, diversify your holdings, and definitely long blockchain and long Bitcoin. And as always, take some profits. If you are unsure of where the market is going, don't leave all your gains, on paper. Obviously, if you want to reduce your risk, then you should cut some of those profits and move them elsewhere to a safer investment. But just wanted to put this into perspective for you guys. Hopefully you will join me next time. I will continue to talk about cryptocurrencies, the investments that I'm selecting, what I'm doing, what kind of choices I'm making, how I'm making those choices, and perhaps I can help you in your future with your coin selections and your investing. Thank you for watching. I'll see you next time.